Definitely, whenever there is a rate cut, there is expectation of increased valuation. In earlier instances, whenever we have seen a sharp uptick in growth, it was along with the rate cut. Government is focusing on fiscal consolidation. Capital goods, definitely good results. What we have observed across the board. Accordingly, we also recommend investors to be in all the parts.
So services sector is one sector which is not really spoken about quite a bit. Now this sector has seen a very sharp growth in the last 2 decades. Could you just highlight about this sector?
All in all, this segment offers a very diverse set of investment ideas.
Hello everyone. Welcome to Moneynomics by Axis Mutual Fund. I'm Shalini Gautam and I have with me Shreyash Devalkar, Head Equities. Today Shreyash will walk us through the latest developments in equities and how investors should plan their investment journey. So Shreyash, let's begin. Stable growth, lower inflation, lower rates by the central bank. What is the impact of all of these on equity markets?
As far as overall macro is concerned, we are actually seeing reasonably good macro for last 5 to 6 years.
Okay.
It was because of multiple parameters. One is government focusing on fiscal deficit, currency stability. Recently, the dollar has also depreciated, which has also given a cushion.
Okay.
The all in all, the net impact is obviously there was one more parameter of lower inflation, what India has seen compared to the world.
Yeah.
And because of that, we have seen there is a rate cut of almost 100 basis points from its peak. Definitely, whenever there is a rate cut, there is expectation of increased valuation. However, since the valuations are already elevated, that angle playing out in the equity market looks difficult. However, when it comes to its impact on growth, definitely it will have some impact on growth. Because of the improved liquidity, the rate has come down. It is being already getting passed on to depositors, and then obviously in future it will get passed on to the borrowers as well. So it is going to have a positive impact. But apart from this, in earlier instances, whenever we have seen a sharp uptick in growth, it was along with the rate cut. There was a scenario of good export stories, and the export and global economy doing well, and because of which export doing well. Because in the listed space of India, export stories are there both in the large and mid caps as well, and that's where export part generally is important for growth as well. And the third part, which is also important, is widening fiscal deficit, basically fiscal room to be used for growth. On this third part, rightly, government is focusing on fiscal consolidation. It is actually lending us a good macro and stable macroeconomic environment. However, the flip side is also it is having some impact on growth, and that's where all these three among these three parameters, one is the rate cut, exports, and fiscal consolidation. Only rate cut can have only limited impact on the growth, since the other two are not contributing as it contributed in earlier cycles.
Okay. Shreyash, could you summarize the earnings season of this quarter, and how do you see valuations in the current context?
Earnings season has been okay during this quarter. One peculiar observation is market toned down the expectation ahead of the earnings result season, and that's where post result you don't see much disappointments because the earnings are already cut beforehand. In that context, if you now take with the largest sector like financial services, the capital market oriented financial services has had a good result. As far as lenders are concerned, both on key parameters like credit quality as well as growth, the results has been good. When you shift your focus to sector like IT and FMCG, these sectors have been doing subpar for last 3 to 4 quarters, and that trend continues. There, the growth rates are in mid single digit. If you look at oil and gas and associated sector, the similar trend what we have observed. Auto, definitely there is a slowdown, and it has its impact on auto ancillary as well, both because of exports and domestic part of auto, and that's where the results has not been that great in that part as well. Capital goods, definitely good results, what we have observed across the board, especially power capex related plays.
Okay.
Some companies have seen margin pressures, definitely, but not all of them, and that's where in that sense it has been mixed. The other segments, which are like electronic manufacturing services, etc., that segments also have done good result. Travel tourism, the trend has been good, as well as EMS and the EV related companies also are growing fairly, if not great, what was the earlier expectation. So all in all, the results season has been subdued on a headline basis, but not much disappointment because the expectations were toned down beforehand. Its impact on valuation is the segments where there is a high growth, they are at high valuations. After every result season, what we are observing is the high growth segments, the valuations are increasing further, while the low growth segments, their valuations remain reasonable. And accordingly, we also recommend investors to be in all the parts rather than trying to ignore growth for valuations, and nor one should ignore valuations for growth. And that's where being present in both the parts is important. Its impact is also seen on the returns. So if you say, with all this volatility over last 1 year, with lot of news flows, election, and then valuation related correction, tariff, the net outcome is on 1 year basis, large, mid, small returns are broadly similar. From the market peak of September 24, also large, mid, small returns are broadly similar. And that's where when someone is choosing, the choice should be between the best companies from all, rather than trying to do either or choice.
Thank you, Shreyash. I do remember you do say that view market caps in totality, which is they are not competing against each other, but they are complementing each other. Now to the next question, I wanted to check, services sector is one sector which is not really spoken about quite a bit. Now this sector has seen a very sharp growth in the last 2 decades. Could you just, highlight about the sector?
Yes, services sector has been the great contributor to economy. It has been the great contributor, first of all, to employment generation.
Yes.
Over the last 3 decades, actually, a lot of employment generation, actually a part of consumption story is actually driven by the services sector. If you take the subsectors like financial services, IT services, a large employer, and that has actually contributed a lot to the upper part of K or middle class and upper part because of these two sectors. The growth in this part of services, generally we tend to focus only on financial services or IT, but services has multiple legs. So when we talk about financial services, apart from just lenders, there are capital market plays, there are fintech companies. When it comes to IT, it is not only about IT services. There are many companies which are into the tech space, which are into AI. Some of them are also benefiting from the products which they have developed for mobile, and some of them are benefiting from gaming. So there are multiple such companies which are there in the services. Though their sizes may be small, but by number they are sizable in number. So there is IT services, there is a software technology, there is fintech, there is capital markets, there are lenders, then there is healthcare services, which is a huge part. And then the healthcare services, we have seen how there has been shift from unorganized to organized. So this sector has seen that shift and has been beneficiary of that. The application of technology into offering better services, it was clearly visible and seen in segments like quick commerce, food delivery, and those segments have done well. That is also part of service delivery. Telecom services is one of the great success story of India. Travel tourism is again a services. So services is a vast sector. There are multiple subsegments to it. There are leaders like companies in travel tourism sector. There are challenger companies in retail space which are there, and there are consolidating sectors which are also visible, like a food delivery, etc. And that's where, all in all, this segment offers a very diverse set of investment ideas across the board. And this sector having grown in most of the economies, when the GDP per capita grows, this sector's contribution to the GDP actually keep on increasing.
Shreyash, now markets fell, investors were nervous. Markets have risen in the last 3 months, investors are again nervous. Now, how should investors really plan their investments? What would your advice to them be, how to go about in their financial journey?
One should focus on one broader fact based on the historical data, is overall returns in the market are closer to nominal GDP growth. In that, there will be time periods when the market will go up much more than what you expected. It will fall much more than what one expects. And in that volatile journey, it's important to be disciplined and stay invested in the market. Rather than trying to time it, rather than getting carried away by the news flows which is driving the market sharply up or sharply down. So that focus of long-term investing and disciplined investment process is what to be followed, and that actually results into a sustained wealth creation rather than trying to time the market.
Okay. I do agree with you, Shreyash, that time is your best friend in the market. So stay invested for the long term. Thank you so much, Shreyash, for your valuable insights. And thank you to all our investors for staying tuned in.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.